Hey everyone, and welcome to Watch Mojo, and today we'll be counting down the top 10 reasons. Alright, just kidding, this isn't becoming a top 10 channel, but we are going to talk through 10 reasons that I think SoFi could double in 2022 from its current price of just over $15 per share. And the channel isn't Watch Mojo, it's fintech. So SoFi has had a rough month, declining in value by around 20% amid a larger sell-off in the fintech space, which is why we saw similar drops from companies like Robinhood, Lending Club, and Square. And since this drop is related to the macro fintech market and not company fundamentals, in this video we're going to go through 10 catalysts that we will see in 2022 that could cause the stock price to rise and even double in price over the next 12 months. So hit the like button if you want, and let's start with the first reason SoFi could double. So reason number one is going to be SoFi no longer having outstanding SPAC warrants, which could have had a surprisingly large effect on the stock price up until now. Now, most SoFi investors probably know that SoFi did not go public via a traditional IPO or initial public offering. Instead, they went public via a SPAC merger, where they essentially merged with an existing public blank check company, effectively taking them public. This gives normal retail investors like you and me a chance to buy into the company before it's technically public by purchasing shares in the blank check company, something that has traditionally been restricted to hedge funds and large private institutional investors. IPOs on average have a one-day trading pop of 18.4% on day one, meaning this trapped value has historically been gained by those same institutional investors and not by regular people. Now, that being said, there is a reason for the IPO process. Investing in a newly public company can be risky, especially since we don't have the same level of insight into their financials that large institutional investors might have, or even that we might have in an already public company. Not that every investor does tons of research even on public companies, but hey, at least it's an option. Plus, there are some more complicated financial instruments involved with SPACs than just buying shares, which is where SPAC warrants come in. SPAC warrants are given out in either when a stock goes public or to private holders of the stock beforehand. These warrants give the holders the option to purchase the stock in the future at a certain exercise price. So for SoFi back in November, this was just over $22 per share. But while those outstanding warrants can be profitable for holders, they can also weigh on the company's financials as a liability. Plus, in a world where we keep seeing SPACs move in correlation with each other, it can hurt legitimate companies like, say, SoFi, when other SPACs end up running foul of regulations or fraud investigations. So as of December 6th, 2021, we no longer have to worry about those warrants as they have now expired, hopefully taking some of the weight off of the future stock price and allowing it to move with the actual company fundamentals, which, as we'll see in the next 9 catalysts, are only improving. Which takes us into number 2, improvements in the SoFi app. SoFi Invest is a relative newcomer to investing apps and lacks some of the features of older apps like Robinhood, but they have committed to reinvest 70% of their revenue into continually improving their products. This could be in the form of adding additional options to invest in pre-IPO companies, adding extended trading hours to match the quotes that they now provide for both pre-market and after hours. They could also allow margin investing for investors, something that should come naturally considering they are a loan company, or add new investment methods such as new SoFi ETFs, which we've already seen a few of, or the ability to do options trading. We could also potentially see them enter the very lucrative buy now, pay later space, which has launched large companies such as Affirm and Klarna to very high valuations in recent years. Buy now, pay later is essentially a high interest short-term loan that allows people to make small purchases with very low friction. Affirm, for example, integrates with Peloton to let you check out with a loan rather than paying upfront. This addresses the millennial market that is kind of scared of using credit cards and has been shown to substantially boost sales on e-commerce websites. And with big companies like PayPal and Square making acquisitions to enter this space, we could see SoFi launch a competitor product here as well. This could help build up the SoFi app user base, which, as I talked about in my last video, provides the company with a market cap increase of around $1 billion per 1 million new users. So any increase from SoFi's current 2.9 million users to move them closer to Robinhood's 22.5 million users, or Cash App's 10 million users, would be a big improvement for SoFi. Speaking of which, check out their app in the description and you'll get $5 when you sign up. And there's also value in just getting more people into SoFi's ecosystem, because once you get a customer using one SoFi product, they tend to use more. Kind of like when you eat one potato chip out of the bag and you think, just one more. And pretty soon you've eaten half the bag. But if those chips also made you richer. Which leads us to numbers 3 and 4, which are improvements to SoFi's Galileo tech platform and their loans platform. Galileo is SoFi's payments processor, which can enable everything from credit card transactions to moving money from a checking account. Galileo also acts as the innovation tech hub for SoFi, where they can create new technologies that aren't just replacements for existing financial services offered by legacy banks. And Galileo has been actively moving their technology platform from an on-premise setup and into the cloud, which has required substantial investment over the past year. But with this migration finishing, it should free up that investment to instead be put toward creating new, innovative products that can drive new value for the company. Plus, just being in the cloud will save them money operationally and speed up their ability to launch new products at scale. Similarly, SoFi has been investing aggressively in their loans platform, creating a new underwriting model that allows them to offer loans to people that previously wouldn't have qualified. They did this using their partnership with Pagaya, which uses AI to move from the old credit score model of evaluating risk for a loan, which only uses a single number, and instead use thousands of parameters instead. This is a similar service offered by Upstart, and if Pagaya follows even remotely close to the path that Upstart did, SoFi could see huge increases in their number of loans made, the quality of those loans, and the number of people finishing loan applications once they start. Honestly, these two reasons are some of the strongest for SoFi's value appreciating next year, but the next one might have even those beat. The number 5 reason SoFi could double in 2022 is an improvement in the loans market. SoFi makes the majority of their money from their lending business. After all, they started out as a student loan company at Stanford University. And while SoFi's performance this past year has been very impressive, this is in spite of their student loan business, not because of it. SoFi controls around 75% of the student loan refinancing market, but their volume of loan refinances are 50% of those that we saw before the CARES Act put a huge slowdown on the industry. SoFi has survived by pivoting to personal loans, but even that hasn't really been helped by all the free money that's available to borrow from the government. But the pause on student loan payments is set to end starting February 2022, and even if that date does get pushed back a little bit, more than likely we will see it end at some point in 2022. And at that point, SoFi's off to the races. Tie this in with the improvements to the loan model that I mentioned in my last point, and SoFi's lending business may continue to not just grow, but accelerate its growth rate through 2022. The fact that SoFi's lending business has already managed to accelerate growth through 2021, despite the impact of the CARES Act, to me makes it look like this growth is being masked somewhat up until now, which could bode very well for the stock price. Although the money I saved on my student loan payments over the past year has mostly gone into SoFi stock, so maybe it wasn't so bad for them. But switching to more of a marketing mindset, number 6 on our list is SoFi Stadium hosting Super Bowl 56 in February. In addition to the 70,000 fans inside the stadium, roughly 100 million people watch the Super Bowl each year, almost as many as watch a typical Mr. Beast video. While I personally don't think that will necessarily translate into a lot of new app downloads, it can greatly help SoFi's brand awareness. I talked in a previous video about a Nielsen study that showed around 60% of people are more inclined to buy products from brands they are familiar with than ones they haven't heard of. So the Super Bowl might introduce 100 million new people to the name SoFi, and then further marketing efforts from their big push in social media or on blog posts could actually get people into the ecosystem. And it's just lucky for us that this event is perfectly timed with the CARES Act ending, a time when people might be looking to refinance their student loans. Also on the marketing front, we have the SoFi app Social Investing. In October 2021, SoFi announced social investing was available for all members, allowing you to discover/follow other members' investment holdings, watch lists, and SoFi Invest activity, which according to their surveys, 70% of their investors use social avenues for investing. Although that's probably obvious to anyone watching investing videos on YouTube, and this is clearly a service that most people would like to have. This reminds me of the investing app Public somewhat, which kind of looks like Twitter mixed with an investing app, but it shows another way SoFi is investing to make their products better. And with a company name like Social Finance, I could see this feature becoming a much bigger part of their business going forward. SoFi does have a very loyal fan base, and giving them more ability to buy into the app and introduce friends is a good thing in my book. Number 8 on our list is SoFi obtaining a bank charter. Now wait, I know it's been talked about to death on YouTube, and still no one knows exactly when SoFi will become a national bank, but this is still a very important step for the company. And I'll give you some numbers as to why. Lending Club is a fintech company that, similar to SoFi, offers a lot of of loans. But they actually obtained a bank charter in February 2021, and we can actually see the effects that this had on their business. Lending Club saw a 90% reduction in their cost of deposits, and their CEO noted during a call with CNBC that they are driving around 30% more revenue on the same loan volume. And this helped the company report incredible results last quarter, boosting the stock around 50% basically overnight. So it's not unreasonable that SoFi could see similar benefits from their bank charter. Plus, SoFi's Galileo platform lets them potentially extract even more value from having their own charter and not needing to partner with another bank to offer new services. Now, it did take Lending Club around 2 quarters from the time they were approved to become a bank and when the effect on their business actually became visible, but for SoFi, that most likely still falls sometime in 2022. If I were a betting man, which I guess I kind of am, I would expect SoFi to see noticeable effects from their bank charter by this time next year. But then the company also said that they would close on their acquisition of Golden Pacific Bank before the end of 2021, and the clock's ticking on that one, Noto. Number 9 on our list is SoFi's continued international expansion. I know, we just talked about them getting a bank charter and now SoFi wants to leave the country. Just kidding. But SoFi originally announced in April 2021 that they were expanding outside the US for the first time by launching SoFi Invest in Hong Kong. And while it's not clear how much market share they've managed to grab in that region, they say they are the only comprehensive investing platform that offers access to brokerage, automated investing, and ETFs in Hong Kong. So it could be substantial. Doing this, they managed to beat even the behemoth Robinhood in becoming the first mover in the space, while Robinhood's own attempt to expand to the UK in 2020 failed. We've also seen success from the Galileo platform in Mexico, and 2 quarters ago, the CEO talked about pursuing more expansion into the Latin American market. And if the due diligence of one Redditor I found on the SoFi stock subreddit is accurate, they may also be looking to expand into Singapore, which is backed up by this company registration for SoFi Singapore PTE, which is described as a stock, share, and bond brokers and dealers. Sounds an awful lot like our SoFi. So in the same way Robinhood came to dominate the US market by being an early mover, SoFi may have an opportunity to compete internationally before too many other companies get into the mix, even though China does already have some presence in Singapore. Which leads us to the final reason SoFi could double in 2022, and that is SoFi taking on the behemoth that is Intuit and TurboTax with their own tax filing service. SoFi sent out a survey to some members for a few months back asking if they would be interested in using a SoFi tax filing service. If you go on SoFi's website today, they have a pretty decent tax preparation section that explains how SoFi will prepare your tax documents for any services you have with them. They also provide the ability to import these automatically to file with H&R Block. So it kind of makes sense that SoFi could build a service that makes it very easy for SoFi customers to file taxes, maybe even offering you the ability to file for free if you're only using SoFi products. I don't know about you, but taxes are not simple once you have a few investment accounts, rental property, maybe a side business, and products like TurboTax really aren't that great for that kind of use case. Now, SoFi isn't going to come out of the gate with a magic bullet that solves all these complicated taxes, but I could see there being an incentive to trade with SoFi Invest over, say, Robinhood if it made it easier to report those trades when tax time came. Plus, this fits in well with SoFi's mission to help people build wealth over their entire lives. Now, the only reason I was a little iffy on including this point is I'm not actually sure if this service will roll out in 2022. It could be a 2023 or even a 2024 product, but I thought it was interesting, so I included it. So to recap, SoFi will see no more SPAC warrants. They will be launching new app features, including a possible buy now, pay later product. They will be launching a new Galileo tech platform products and improvements to the loan model with Pagaya's AI system. We should also see a clearing up of some macro headwinds in the loan market, coinciding with a ton of exposure for SoFi at the Super Bowl in February. We'll see SoFi's social investing continue to pick up steam, approval of SoFi's bank charter, more international expansion, and maybe even a tax filing solution. But let me know which of these catalysts for SoFi you think will have the biggest impact in 2022. Grab your $5 from SoFi when you sign up using the link in my description. Don't forget to like and subscribe, and I'll see you next time.